Investor engagement and stewardship are fundamental components of responsible investment and ESG integration. Rather than acting solely as providers of capital, investors increasingly recognize their role as active owners who can influence corporate behavior and promote long-term value creation. Stewardship refers to the responsible management, oversight, and monitoring of investments on behalf of beneficiaries and clients. Engagement is one of the primary tools used within stewardship, involving direct interaction between investors and investee companies. The purpose of both activities is to improve corporate performance, strengthen governance, manage ESG risks, and encourage sustainable business practices that support long-term financial returns and broader economic stability. The primary purpose of investor engagement is to influence companies to improve their management of material environmental, social, and governance issues. Investors engage with boards of directors and management teams to discuss topics such as climate strategy, workforce management, diversity and inclusion, executive compensation, governance structures, risk management, and disclosure practices. Through constructive dialogue, investors seek to encourage companies to adopt policies and practices that enhance long-term resilience and competitiveness. Engagement provides investors with insights into corporate strategy and decision-making while allowing companies to better understand shareholder expectations. Effective engagement can therefore contribute to improved performance and stronger stakeholder relationships. Stewardship extends beyond engagement and encompasses a broader range of ownership responsibilities. These responsibilities include monitoring investee companies, exercising voting rights, participating in shareholder meetings, evaluating governance structures, and assessing ESG performance. Stewardship recognizes that investors have both the ability and responsibility to influence corporate behavior through active ownership. By exercising stewardship effectively, investors help ensure that companies remain accountable to shareholders and other stakeholders. Stewardship also promotes transparency, ethical conduct, and sound governance practices. As ESG investing has evolved, stewardship has become increasingly important as a mechanism for protecting and enhancing long-term investment value. Investor engagement can take multiple forms depending on objectives and circumstances. Direct engagement may involve meetings with company executives, board members, or sustainability teams to discuss specific issues and performance targets. Investors may also submit shareholder resolutions, collaborate with other investors, participate in industry initiatives, or use proxy voting to express concerns and influence decision-making. Engagement strategies are often focused on identifying material risks, encouraging improvements, and monitoring progress over time. Successful engagement generally relies on clear objectives, ongoing communication, measurable outcomes, and a willingness to escalate actions when companies fail to respond adequately to investor concerns. The benefits of engagement and stewardship extend to both investors and companies. For investors, active ownership can improve risk management, strengthen portfolio resilience, and support long-term value creation. Companies benefit from constructive feedback, improved governance practices, enhanced ESG performance, and stronger relationships with shareholders. Engagement can help organizations identify emerging risks, improve strategic decision-making, and align corporate practices with evolving stakeholder expectations. Research and industry experience increasingly suggests that companies with strong governance and effective ESG management may be better positioned to generate sustainable long-term returns. Consequently, stewardship activities contribute to both investment performance and broader market efficiency. From a sustainable investing perspective, engagement and stewardship also serve an important systemic function. Many ESG challenges, including climate change, human capital management, biodiversity loss, and governance failures, cannot be addressed solely through buying or selling securities. Active ownership enables investors to encourage positive change while maintaining investment exposure. Stewardship supports responsible capital allocation, strengthens market accountability, and promotes sustainable economic development. As a result, investor engagement and stewardship have become central elements of modern responsible investment frameworks. They reflect the view that investors can create value not only through investment selection, but also through active participation in improving corporate behavior and long-term sustainability outcomes.